Good morning, good afternoon, good evening, wherever you may be. This is Sid from Elliott Wave Plus, and this is the September 20 of 2020 edition of my weekly counts webinar, where I go over all of my Elliott Wave counts and associated Fibonacci price targets for many of the world's major stock markets, commodities, currencies, and bonds. Hurst cycle analysis, as well as a number of other forms of technical analysis, will also be considered on virtually all items. Before we get started, I'd like for you to be aware of my disclaimer. It is at my website, which I need to bring over here, ElliottWavePlus.com, and you scroll all the way to the bottom, click on the Terms of Service Disclaimer tab, and there it is. It's there all the time. If I were to summarize it in one sentence, it would be, there's risk of loss in all trading. Okay, I'll turn off the camera here and we'll be off and running with the wave counts. The Dow Jones Industrial Average long-term count, obviously, doesn't change very often. And if I can get it squared up on the screen here. There we go. I'm thinking 5 waves up is complete from the 2009 low in the Dow Jones Industrial Average. And moving into the monthly, after a 5-wave up structure from the 2009 low, I believe we'll get a corrective structure back next. I'm currently calling for a zigzag. It could be something else. It can, since my main count is that it would be a cycle degree wave 2, it could be a zigzag. It could be a flat. There's several different kinds of flats. It theoretically cannot be a triangle, or it could be a WXY complex correction. At this very early stage, I'm choosing to project it as a 5-3-5 zigzag. That is probably the most common structure for a wave 2. And if this is going to be a 5-wave structure to the downside with the top still in place from February on the Dow Jones Industrial Average, then it would have to start with a 5-wave structure to the downside. You'll notice on this monthly chart that the high, the RSI, the high that occurred in January of 2018 was the highest reading ever in the history of the stock market, going back 100 years on the RSI. And since then, we've got 2 divergences, the one that occurred later that year, and the RSI made a lower high, and then a lower high on the RSI at the high in February, and the most recent attempt to get back to that January, February high in the stock market fell a bit short in Dow Jones Industrial Average, and you can see that the RSI was substantially weaker once again, even though it came pretty close to equaling it. So lots of divergences going on, and using Hurst cycle analysis as well as the new Ftse cycle tool, and kind of building a projected forward roadmap. Still looking for down into November, up into January, February timeframe, and of next year, and then on down through August of 2020. If this roadmap is correct, that will be an ABC structure for a wave 3 of a contracting leading diagonal. There would be a very tight window down here that it must stop at. It's just ever so slightly below the March low of this year. So it's a little bit of a difficult expectation, but for now I'm sticking with it. Seems to be working. And then moving into the daily chart, have a main and an alternate. You'll notice that Hurst cycle analysis is projecting that the market will somehow stay up on the Dow through September 23. September 23. So that means Wednesday of this week that the markets will kind of stay up. So, and the reason I use that particular date based on my view of the composite line is that is the point at which it starts getting more aggressive to the downside. So that's my main count is therefore that the top is in that early September. So I think of September 2 high is that would be the end of Black Wave 2, and we're getting started in a new 5-wave structure to the downside. We've already seen on the in the futures market in both the ES contract and the NQ contract 5-wave down structure to start, and then a corrective structure, sideways structure since then. And I'm calling it as a finished 1-2, and maybe we get another little 1-2 here or something before it gets going to the downside. If I were to jump all the way into 90-minute on this, 1, 2, 3, 4, 5, that looks like a potential leading diagonal for initially for a 5-wave structure to the downside. And then an A, B, C, correction. The retracement so far has made it back to the 50% rate retrace that occurred on Wednesday of last week. That was the Fed day, as I recall. And so I'm calling it a 1 and a 2 in place, and we're embarking on a wave 3. There's several different ways this wave 3 could go. One is, and this seems likely based on that staying up till Wednesday of next week, that we've seen another small degree wave 1 to the downside in the Dow. And now we're getting expanded flat for wave 2. So 3 waves up for A B wave, and a C wave up. So when we move this back to a daily chart, you can see that you can see a 1, 2 right there. So I think we're starting this downward movement with 1, 2, 1, 2. Let me be very clear about what the cycles are suggesting, and that is they are suggesting downward movement in this market. Hurst cycle analysis, that's where the composite line comes from, and manages to stay up through September 23, so it's only 3 more trading days. And then it is bearish down through December 1. The Ftse cycle program is quite similar. It takes only the most accurate and dominant cycles into consideration on its composite line, and it is suggesting downward movement from September 9 down through December 18. So the projection is for downward movement, and we'll see if that maybe gets going a little more aggressively toward the latter part of this coming week. The trend following system on the Dow Jones Industrial Average, we don't have a trend change yet to the downside. In order to get that on a daily chart, the MACD line, which is this green line, would have to move down and cross over the 0 line on the MACD, and that would officially constitute trend change. That hasn't happened yet on the Dow Jones Industrial Average, but drum roll, it has happened as of Friday on the S&P. Now, we did have the MACD move down and cross over there. So we have a trend change, official trend change to the downside on daily chart on the S&P. The system, the way I developed it, the trend following system, is very patient about calling for a trend change. You can see that off of that March 23 low, it didn't call officially a trend change from down to up until April 16. So it waits until there's pretty good proof of a trend change before it designates it. And the last signal we got on the S&P was the sell signal on Thursday on the trend following system. So that, as far as trend following thing, it's going to start preferring shorting the market now as opposed to going long. The last signal on the daily chart of Dow Jones Industrial Average trend following template was a sell signal also on Thursday, but so far that is considered a weak signal because it's still inside of a sideways consolidation, and it hasn't broken out of that to the downside yet. And so that is where when it breaks down below this gray box is when we're likely to see a trend change to the downside and possibly a trend following sell signal on the Dow Jones Industrial Average. We may not get that, according to Hurst, until later this next week. The momentum algo was short on the Dow Jones Industrial Average starting September 4, and it closed that position September 15 in profit. It's currently flat. And as soon as we get a crossover down here of the Walter Bressert, which is a double smoothed RSI, and the moving average of the Walter Bressert, we'll get another red block. It looks like that could happen with any further downward movement. The slower reacting AMA line is already sloping to the downside. We would probably need to see a daily close back above that in order to get that to even have a chance of turning back to green, or we might need 2 daily closes back above it in a row in order to get it to turn back to green. According to cycles, both cycle systems that I use, that's unlikely to occur. And the next signal we would get here would be another sell signal, more than likely. It appears that there's was a possible kind of attempt to rotate into blue chips last week with the commercials as a percent of open interest kind of moving to the long side. But as you can see, the slower moving 6-month look back, where it looks at current commercial positioning and places it on a scale. The high end of the scale being the most bullish that the commercials have been positioned in within the last 6 months, and the low end of the scale being the most bearish positioning they've had in the last 6 months. And you can see that it is trending to the downside, and that indicates that the commercials are taking profit and potentially entertaining short positions as far as the longer term look at it. Now moving to the S&P, the S&P, unlike the Dow, did make a new high above its first quarter high of this year. But as you can see, we have a pretty substantial looking reversal candle underway. That is not a completed candle yet. That's the September candle, but it's quite bearish looking. Looks like a reversal at a point where you would expect one, given the massive monthly bearish divergence in place there. And once again, cycle analysis is bearish down into November, possibly early December now, based on the two different cycle programs that I use. It'd be a 40-week cycle trough down in there. And in the case of the S&P, the composite line, which, by the way, I've used, I talked about this in recent weeks. I recently switched to troughs only as far as the computation of the composite line within the Hurst system. It is clearly bearish now. There's no more suggestion of any more really upward movement. And it is bearish from September 18. In case of the S&P, down through November 24. And the Ftse cycle program has a little less detail in the composite line. It's smoother, and it's bearish from September 3 down through December 11. So there's the bearish roadmap. Looking in a little closer at what's going on right here, I do think we got a clear 5-wave down structure, and then a clear ABC looking structure. This is probably similar to my expectation on the Dow, that we getting maybe another 1 and 2 here, and like that. Yeah, sure, William, that's good. Thank you. Well, we would look for a blue wave 3 that was at least 1.618 times the length of wave 1, and potentially 2.618, especially if it starts with a 1-2-1-2, that would suggest a longer third wave. So there's a couple targets there. The high target is 30.38. And then the reason I'm expecting a little bit bigger move is that I'm counting this as a 5-wave up structure, so I'm looking for a move back to the wave 4 of 1 lesser degree. Be advised that this 5th wave here would have to be considered if we got a 5-wave up structure from the March low in the S&P, 1, 2, 3, 4, an extended wave 5. Another really important target here would be the returning back to the extreme of wave 2 within the prior extended 5th wave. So there's a zone, and that level is 29.65. So there's a zone down here that maybe isn't quite as bearish as what I had drawn before putting in the targets. $29.65. So there's the targets, and then moving into the 90-minute chart. You'll notice that so far, on the ES contract, I'm counting 1, 2, 3, 4, 5 waves. There's 5s down through here, and then a W, X, and then an A, B, C for wave 2 here. So it was actually a relatively shallow wave 2. There is the potential that the wave 2 isn't over yet. And if that, I'm placing it on that alternate over there on Wednesday, which is the same day on the Dow Jones Industrial Average. Looking for it. So it's possible that the wave 2 isn't over yet. And one thing that kind of supports that argument is this move down here. It looks like an ABC, and then we get a pretty good pop here. So if we get a little bit more upward movement above 33.28 on the ES, then this is only a 3-wave down structure. Now, could that be a 1-2? Yes, but that would mean that any movement to early in the week above 33.63 would suggest that maybe the wave 2 isn't over yet. But yeah, this could be a 1-2, 1-2. But that would really limit the upside. Just be aware of that. Yeah, maybe. Might be a gap right there. That'd be the gap. Thursday. Yeah, it didn't look like it quite filled it here. So that's, and then there's another way to count this, and that is a 1, 2, 3, and then a running flat or a triangle through wave 4. Then the wave, and so the 5-wave down structure would have ended here. And if that is the case, I've drawn a light blue Fibonacci on that, and that created this target here, which would be a 0.618 retrace after that 5-wave structure down. And so if that's the end of 5 waves down, then this definitely looks like a 3-wave structure to the upside. That'd be a W. This would be an X. This would be a Y. This would be possibly another X. And we'd be getting a triple zigzag. So if we, early in the week, if the ES, and I wouldn't be surprised at all if this happened, if the ES moved up past 33.63, then a pretty good target for the retrace would be back to 34.72. That would be a 0.618 retrace. So there's the S&P 90-minute intraday chart. I would have to say, if this low down here is taken out, there's a very good chance that this is into wave 2. Any movement below 3280, and I think we probably are involved with the wave 3 down. So there's the S&P. Okay. See what other goodies we have here before we move on. Yes, as I had mentioned, we have a trend change on the trend following algo from up to down. So the trend remained to the upside from April 16 through September 18 on this system. Greg, the answer to your question, Greg, was put in on the 240-minute chart on where the targets are if wave 2 is in. So there's several targets down here for the wave 3 as well as the entire retrace that I covered on the 240-minute chart. On a sell signal from Thursday, on the AMA algo, trend has changed to down, and the trend following system is also on a sell signal from Thursday. Sentiment, the commercials as a percent of open interest are heavily short, and the slower acting 6-month look back are definitely moving from very long to shorter. So there seems to be a movement out of long stock positions, and there's some evidence of that in both the Dow and S&P. The SSO is a 3 times bullish ETF, 2 times And as you can see, it had some decent winners on the way up, but right now it's flat. And the 2 times bearish S&P SDS has already given one buy signal back on September 3rd. It closed that out in profit on September 10. And now on Friday, we got another buy signal on 2 times bearish ETF SDS. This hasn't been giving many buy signals this year, as the price has reliably stayed pretty much below that AMA line. Adaptive moving average. In the case of this, the SDS, that adaptive moving average, is set to 8, 3, and 30. That's the 3 settings of it. And so I would have to say that as long as price daily close stays above that line, which is currently sitting at 1546, then we're likely just to get buy signals. In other words, signals to short the market. HDGE is just barely off its floor. And, if the market does start to move down, I would expect this one to move up. It's an actively managed ETF that actually shorts about 75 stocks all the time based on fundamentals. How they make those decisions these days with the lack of fundamentals, I don't know, but lack of fundamental information. Here's an interesting one that shows the difference between, you remember how the large stocks, the largest cap stocks, the large cap tech were dominating the S&P, which is market cap weighted, and it causing it to outperform an even weighted S&P, and that all ended on September 2. And now you can see that the large cap stocks that were leading the parade higher are also leading lower here, playing a little catch up ball, and they've been more bearish than the equal weighted. These two generally are moving together, but it appears that the stocks that were leading are now playing some catch-up ball back to the downside. This is daily closes of black is the stock market. Gold is orange. Bonds is purple. US dollar is green. And you can see now that the US dollar has stayed above its August 31 low, and looks like it may have given maybe a 1 and 2 type of framework. This would be a natural time for stocks and gold to move the downside. Bonds, we'll see. In my opinion, I think bonds will also catch a flight to safety bid and move to the upside over the next few weeks. We'll see that later in the webinar. So it looks like the flight safety winners appear to be may come in the form of the US dollar index and bonds, because gold has been moving pretty much in sync with the stock market. It appears that those two are both kind of keyed to the US dollar index. And in other words, they're likely to move opposite US dollar index. So if the US dollar index does break into kind of a third wave up, I would expect weakness from both of those items, the stock market and gold. RSP, the equal weighted, this is the trend following on it, and it gave us a sell signal on Friday. It is below the blue line, which is the ATR volatility stop indicator, standard settings. And you can see that the MACD line, if it doesn't cross and start moving back up, and it continues to fall down through here, the 0 line, we'll get a trend change to the downside here very soon as well. Now onto the Nasdaq and Russell. Nasdaq, and at the moment, and this is not a finished monthly candle yet, we have what appears to be a bearish engulfing candle for potential bearish engulfing candle. We'll have to wait to see how it closes. Off of the top on the Nasdaq, it's an important development. Looking for that same ABC structure, multi-year bear market. Interestingly, Hurst on this expects that tech is going to stay up until October 8th. This is really interesting. And then fall down through mid-November. The Ftse cycles program, and maybe I'll just bring it over here real quick. We'll just run a quick NASDAQ on this. And we can see that 172 is the dominant cycle, and then the next is a 73. And then we'll get this over here. And then we got a bunch clustered together, and it might be interesting to put in that 311, get a little longer term look. And then we want to add something down in here between 34 and 39. I'm going to choose just the strongest. We'll call it a 34. And there's the composite line. As you can see, it's in the accelerative phase. And it moved down through maybe December 4, possibly stay down through December 22. But there's no question that the dominant cycles are pointing to the downside here. And therefore, this expectation that it'll hold up till October 8. As a matter of fact, I need to put this date in here, August 28. So you have some additional reference. I'm kind of, as I've mentioned recently, I'm kind of trusting the Ftse model a little more than the Hurst right at the moment, because there's been no place for Hurst to put the 20-week cycle. If this is a 40-week here, that timing is based on where this 4.5-year cycle was. So somewhere right in the middle was a 20-week cycle trough. And there's just no good place to put it. There was just too much of a one-way rocket ship. It's a very low confidence location wherever it's trying to put it there. And that's one of the reasons why I'm really not trusting the expectation that that this would somehow stay up all the way through October 8. I think it'll move with the rest of the markets. So the daily chart, and that's exactly what I'm showing on the daily chart, that I just don't think it can stay up all the way to over there, even though Hurst is saying, yeah, we're going to get a bounce here. Not all the way to October 8. And then you can see these expectation of a low and probably in late November. So on an NQ contract, here's the count there, and just to make it easier to see, I'm going to take off some of these things. One, two, three, four, five. Once again, there's a possibility of a kind of a triangle or running flat here for a 4, and that the 5 waves down didn't end until here. And then, you know, an ABC where wave C fell a little short of the top of A. It's very bearish, and it's not surprising that this would be bearish considering the extraordinary situation that occurred that pushed it into nosebleed territory there on September 2nd, and that I've talked about many times in the past. So the main is that we got an A, B, C, or possibly a W, X, Y. Both of those end here with a blue 2, or the other possibility is that the 5 waves down ended here, and we've got an A, and this is a B wave down through this low, and now we go on up. And I'm going to put it through Wednesday. I'm not going to put it through October 8. I'm going to put it through Wednesday, which matches the Dow. So this is either a 1, 2, 1, 2 down here, or if we get a bigger rebound, and I wouldn't be the least bit surprised, as I had mentioned to you before. The market generally doesn't make it easy for you to short. It'll try to take the weak hands out of those short positions if it at all possible can before it starts screaming to the downside, usually. Now, that didn't happen off of the February top. It started to the downside, gap down big, kept going. Rare. It's rare to see that. And so I'm still going with the idea here and presenting the idea as if the market is going to do what it typically does and make it as hard as possible short. So any movement above let me get this where we can read it. 11,163. Any movement above 11,163, and we could easily not be finished with the wave 2 yet. Okay. The trend changed to down on Thursday on the Nasdaq. So the trend is also down on the Nasdaq. So we have the trend on the trend following system. The trend direction is down now on daily chart on the Nasdaq and the S&P, not on the Dow yet. And then on the trend following system, the last signal we had was a sell signal on September 4, which at the time was considered a weak signal against the trend, but that is no longer a signal that is against the trend, and it's still the last signal we got. We also got a sell signal on the AMA momentum system on Friday on the Nasdaq. Beware of this situation. I already showed you that it was pretty obvious that the commercials were kind of giving up on the Dow and the S&P, but not the Nasdaq. Not the Nasdaq. You can see that commercials as a percent of open interest heavily long. Commercials on a 6-month look back are as long as they've been at any point in the last 6 months. Isn't that amazing? So I would take that into consideration that during topping processes in the stock market, there's often a dogfight, an attempt to rotate, but it may be that the large cap tech is still a major magnet for money managers. That are just going to, stick. They got to stick with something, and high cap and high or large cap tech still for the long haul where they want to be. So just beware of that potential sentiment positioning there. On the 3 times bullish Qs, there was an attempt to buy on the 14th and met in failure, exited in loss on the 17th. And the buy signal we got on the bearish 3 times short NDX ETF called SQQQ, and that it suggested getting short the Nasdaq on September 3rd, and that was stopped out in profit because it was trailing the stop on September 10 for a small winner, and it's currently flat. Russell, very bearish 1-2-1-2 count. Looking to the downside on the Russell, there was some lip service given by the financial propaganda media about how there appeared last week to be a rotation out of large cap tech into the Russell because the Russell was green last week. There's the weekly candle right there, and as you can see, it's green. However, it gave up half of its gains on the week at the close on the week. And that honestly does not look to me like a strong bullish candle formation. Matter of fact, it looks bearish from Elliott Wave standpoint. And then when you bring in the cycles, yeah, it's bearish. The Hurst cycles is saying it stays up through September 21. That's tomorrow. So I think we could start seeing some weakness come into the Russell. This talk about a rotation into the Russell, I don't think makes any sense for a money manager right now. They may try to rotate back in after some 20% dips in a few selected, large cap tech stocks. They may just figure that, hey, on some of these stocks, we've seen about a 20% move to the downside so far. That's enough. I want to start buying back in there. That's possible. So it could be that despite the talk on Friday, that Russell is going to return to being the weak item. That is what weakest item. That is what the cycles analysis is saying. And Hurst is bearish from tomorrow through November 23. Whereas the Ftse cycle program is a little smoother line. It's been bearish since August 27, rightly so, and down through mid-November. You might say, well, Sid, where's your targets here if the 1 and 2 are in? It depends on where that wave 1 was. But I'll put in some targets, and once again, I may be being overly bearish here in my drawings, but now that we have a chance to throw in some targets, I'm going to throw in a 0.618, 1.618 for wave 3 target, and a 2.618. And I'm just going to choose the 2.618. And the reason I would choose that instead of the 1.618 is because it's still quite a while. There's quite a bit of quite a few trading days between now and the middle of November. Plenty of room, and if we get into some kind of down move here, and if it's going to last all the way down to late November, there's a lot of room to the downside because these down moves generally are faster moves. So I think the best target to the downside is 3 equal 1 times 1.618. $2.618. So I've drawn it where my favorite target is down on the Russell to 1303 next. That could be a fairly quick trip, and that would be a loss of 15% on the Russell, and over potentially just a week if this roadmap is correct. Not a week, over a month. Oh, I got an email from, I don't think I've got it handy here. I've got an email from Larry Williams. It was one of his blanket emails. It wasn't a personal email. So if any of you are on his mailing list, you might have gotten this. And it's called, and it basically called his email subscribers' attention to an article at Market Watch. Opinion: stock market is at the start of a sell-off, says veteran trader Larry Williams. And if you go to Market Watch and read that story, I think you'll be interested to know that Larry and I are pretty much aligned on almost everything that he talks about in the market in here. Gold will not offer a hedge during the down move. More of a sell-off is expected. And so on and so forth. It gives some specific information there. I don't know how old this article, when the information was gathered for the article, he's talking about being long natural gas, but I think that might have already played out for now, and he was right about it, but that's, I think, already played out for now. I'm not sure he's necessarily wanting to stay long right at this juncture, but I don't have a way necessarily to ask him. But anyway, I thought that was a real interesting article. Almost every view that he has is pretty much in sync with what I'm saying, and a lot of the tools we use are the same. So Oh, okay, good. Thanks, William. So he's still looking for an opportunity to get back in natural gas. Would you say it's correct? He's looking for a longer term move to the upside than what we've already seen. No, okay. So the article is real positive about nat gas. So I think that part of the article probably isn't quite exactly up to snuff. But everything else, I think absolutely everything else he says in the article, we're right on the money with him here. So that's kind of neat. Um, okay, moving on here. He also is going to retire, I think, at the end of the year, it says in the article. And retired to just trade. That's pretty neat too. Um, so on with the wave counting, etc. So there was an attempt to go long the Russell on Wednesday of last week, got stopped out on the momentum algo, but the trend is down on the Russell. You can see that the MACD moved down kind of just slightly below that line. It's kind of flirting with the possibility of trying to move back above the line. But if the Russell turns right here and now and right here and now and moves down and doesn't close above this ATR volatility stop blue line, then I think we have a bearish situation, a relatively imminent and immediate bearish situation in the Russell. Let's see what the sentiment says. Yeah, see, on the 6-month look back, commercials have been getting gradually shorter and shorter on the Russell ever since, probably June. We have a little bit of a bump on this on the commercials as a percent of open interest, but not that much. I think, and you can see with the commercials, the 6-month look back commercials heavily short here. That's put a red box, warning box around candles that is generally a bearish warning. The last time we saw the commercials this heavily short position on the Russell was February 13th. February 13th. And during a period, that sideways period from January through February of this year, and you can see how that turned out. So, so there's the Russell. Selling a few ticks below last box for entry. Yeah, so basically what William is saying is any new low below 1477.7 and would likely continue to the downside, and I believe that that is correct. There was an attempt to go long last week on the Russell. I would use via EWM. That didn't work out on the momentum algo. And I would have to say that this kind of basing process that the TWM has been putting in, this is, if you like to use ETFs as a way to short one of the general stock market indices, this one might be one of your better bets right at this juncture, in my opinion. Okay. Semiconductor index bearish down into November, rebounded into February, and then on down. So I think we've seen a very large degree top there as well. Let's look at some of the popular stocks. Yes, that's a good recommendation, Ron. And anybody that's putting comments in on the chat, be sure to make it, set it to all panelists and attendees. All panelists and attendees. Yeah. Unless it's something that you just want me to see, which is, your prerogative. All right, Apple. I think Apple ended an expanding diagonal there in early September. And now it's broken back in across that trend line, extending from extremes of 1 and 3. And I think this is the beginning of a correction down, and it's going to move down, just like almost everything else, down into November. Actually, the composite line says that it won't bottom until Jan 4. It's the Ftse cycle program down from August 11th through November 17th. So there's the window. It's in the fourth quarter. Also an Apple on the trend following algo, or trend following chart template. The trend on Friday changed to down on daily chart on Apple. And as a matter of fact, the trend has turned down now on all of the FANG plus 3 stocks, except for Tesla. And the only reason the trend hasn't turned down on Tesla, we'll look at that in a minute, is because of the incredible trajectory into that top and how super aggressive it was. So the MACD has a long way to fall to get back below the 0 line. And there's been a little bit of a bounce in Tesla in the last little bit, amazingly. Amazon looking lower into the fourth quarter next. I think a large cycle top is in. The trend changed to the downside on Tuesday of last week on Amazon. Boeing having been beaten down very hard, still the potential of really more of a sideways trajectory, not as much. But so maybe a little bit more of a rebound here before it moves down into the fourth quarter. Boeing has been moving sideways. Now, it did kind of dip below this trend channel, this very ever so slightly up slanting trend channel. Boeing does really not acting well. It's not trading well. Disney looked like last week that it started to give way to the downside, looking down into November. We don't have a trend change on Disney yet because the daily MACD hasn't crossed below the 0 line, but you can see it's any more downward movement, it's going to be flirting with this up channel line. And the Disney looks weak. Facebook is on its way lower. And it's possible that we have seen a 5-wave down structure and that we get a little rebound next on Facebook. So Facebook all-time high 304, and Facebook is already down almost 20%. The trend changed from up to down on Friday as well. On Facebook, using the trend following methodology, and we have a trend channel break. Now, often when there's a trend channel break, it'll come back to the channel, it'll try to come back to it, test it, and then fall. So we'll see if that occurs on Facebook. 1, 2, 3, 4, 5. I wouldn't be surprised to see Facebook come back to the wave 4 of 1 lesser degree area before falling lower. Google, just like everything else, giving it up pretty hard, looking for movement down into late October. Trend has changed on Google as well on Tuesday of last week to the downside. So a lot of these leadership stocks really giving way pretty hard. Google is down almost 20% so far. Apple so far down 23% so far. Amazon down 18, almost 20% so far. So the high flyers are all well off of their highs, almost 20% on Facebook. Now moving to Microsoft. I think Microsoft is going to work its way lower over the next year, but initially to the downside into the fourth quarter. The trend changed to the downside on Monday of last week. No, Friday, the week before. Microsoft is down 15% so far, over 15. Netflix looks like it's just starting to give way to the downside. Netflix is down from its all-time high, which is still standing from July, mid-July, 20%. The trend is down as of Tuesday of last week. And in Tesla. I still think the top is in on Tesla. And that initial move only took 1, 2, 3, 4 days. So Tesla through from September 1 through September 8, only 4 trading days, down, lost over one third of its entire value in a matter of 4 days. I consider this stock to be exceedingly risky to get involved with. And now it has come back and is flirting with the ATR volatility stop line. And the MACD is at a critical juncture. Is it going to turn back up or is it going to turn down? I don't think Tesla is anywhere near moving, finishing with its corrective structure. And as we can see on the Tesla on this, generally looking for a big move to the downside on the stock that is the poster boy for being overpriced and no one cares. And right near that top, the P/E ratio on Tesla reached 4 figures. It's over 1,000. Walmart is one stock where I think it's possible Walmart has one more move to the upside. I just don't see enough subdivisions to the upside from this low in March that 1, 2, and then 1, 2, 3, 4, 5 for 3, 4. I think in the case of Walmart, it's possibly going to move up from 135 to 156 next, and that would be a fifth wave. So this doesn't look like a completed 5-wave structure, the upside. I think it needs to move on up. So it could be that Walmart has one more high to make. Notice that the MACD on Walmart really isn't that close to the 0 line, MACD line. So 1, 2, 1, 2, 3, 4, 5. I'm not sure that's a correct count, but anyway, we'll see. Maybe we shouldn't expect a completed 5-wave structure the upside. Maybe this is an A and an outsized B wave, and that we're going to move down next and complete another wave 4. It's hard to say. You know, I have a few of these charts, like NVIDIA is on a sell signal, but a weak one from Thursday of last week. Zoom is staying up. This might be one of the strongest stocks of all of the high flyers, because it just doesn't seem that this work at home thing is necessarily going to go away. It's not a fad. There's going to be a lot more going on here, and so Zoom, even though it's starting to look a little toppy on the MACD up here, it just really hasn't given up much yet. Roku looking a little weak, like it could fall down through this channel. I've had Roku. I don't know why Roku is so flippin' hot. I've had Roku streamers, and I've used Amazon streamers, and I've used Apple streamers, and the Apple TV streamer is clearly the best. It's got more horsepower. You can scrub through video with a little touchpad on the remote. You can't do that on any of these other systems. So if you want to find something that you're watching, you can scrub through the video timeline with the Apple remote. Clearly the best streaming product I've used. Much better than Roku. Roku is just, you know, I don't know why it's such a hot deal. I think this stock is bearish. JP Morgan has been moving sideways. Yeah, but William, they don't have scrubbing. They don't have the ability to scrub with a touchpad on the remote through video. And I had no idea that Apple had it, but my daughter had it. Said, you got to get one of these. So I did. Not sorry. It's expensive, but I think it's the best one. Let's see here. JP Morgan, the trend just turned down again. You know, it's been really just chopping. It really hasn't gained much traction here. And we'll look at financials in a minute when we get to that as far as Hurst is concerned. But amazingly weak performance from the financials. Really very much just a sideways trajectory after the plunge down into March. Very weak. And, you know, that's, you know, probably because the move up in the stock market was so concentrated in a few high-tech large caps that I can see why fundamentally no one would want to go into financials, because if this COVID thing doesn't let up, and the move up in the stock market is a mirage that's about to dissolve. The banks are still on the hook for a lot of loans to restaurants and other small businesses that may not make it, that probably aren't going to make it, that may have already gone down, et cetera, et cetera. So it kind of makes sense that there hasn't been much action, bullish action, in my opinion, in JP Morgan. William says they are paying a decent dividend. Pfizer. Pfizer, according to Bill Gates, is the company that's most likely at this juncture, if you're going to bet on a company to be the one that produces the first widely distributable vaccine, is most likely to be Pfizer. And yet their stock really hasn't gone much of anywhere. I mean, it did recover nicely off the March low, but up through early May, and it's just been moving in a sideways pattern ever since. A, B, C, D, E, no. A, B, C, D, E. Maybe at some juncture they get some kind of blast out of a triangle on news on a vaccine, but right now, surprisingly weak for a company that theoretically is in the lead on that vaccine business. Adobe looking weak. Salesforce got a big gap up. That's about all it could do. Now it's looking weak. Now to cover a few VIX items. I think this chart has turned interesting again. It showed this is the 89-week simple moving average of the advanced decline line. You go back in history, and this indicator topped in July of 1987, about 2 years and 8 months prior to the Y2K top in March of 2000. And then this indicator topped in October of 2004, and that was 3 years exactly prior to the top in the stock market in October of 2007. So it's generally about a 3-year lag. So in February of 2014, the indicator topped, and you move forward 3 years from there, 1, 2, 3, and it's more like 4 years to get to that top in January of 2018. So there was a divergence. The indicator did not make as high of a high there. And then look how weak the indicator was until the stock market made a new all-time high in early September of this year. So profoundly weak into that high, much weaker than the divergence into the January of 2008 high. And now this indicator has given way pretty solidly to the downside. If you ask, this is a very long-term looking indicator that's predictive about 3 years out. And you move forward 3 years from this indicator top in September of 2017, you come exactly to this price top here. This is like a double divergence. And these tops that occurred, that this indicator seems to predict about 3 years ahead of time, were major tops. Food for thought. Volatility, here's an amazing feat. The volatility on Friday was down, on Thursday and Friday was down, but stock market was down. This is not the first time we've seen this. We were seeing it back here before this move to the upside in the VIX. And we just saw it again. This is starting to happen more and more, and is kind of disconcerting about what our underlying forces are at play in this market. So the VIX was headed down, and then it broke out of the channel. It put in a base, but a much higher base than it typically does. Usually base is back down around 10 to 15, and this base that it put in back here was above 20, was around 20. So the VIX is riding higher than usual, especially going into an all-time high. There's that September 2. And amazingly, the day of the all-time high in most of these stock indices, in several of these stock indices, September 2 was also a buy signal, a breakout buy signal on the VIX. How crazy is that? Normally a buy signal on the VIX means it's especially a breakout buy signal, would mean that we would have seen some bearish activity leading into that a little in some continuation. But in this case, came on the same day, all-time high came in the same day as the buy signal on the VIX. Now that, I doubt we'll ever see again, anything like it. And now it's flirting with the ATR, and it's likely to break one way or the other. If my roadmaps are correct, it's going to break to the upside. Beware of a breakout to the upside in the VIX. When it happens, you'll see it here because I include this chart every night for you on the daily trend reports. Interesting to see Dow Jones Industrial Average inverted on a VIX chart. I don't know if I can actually do that. I can, but I might have to look up a couple things, but I'll try. Now the question is how to invert it. And I can't remember how you do that. Flip price bars. So there is the inverted, it's that purple line, Dow Jones Industrial Average. Oh, I can change that real easy to the S&P. Whoops. Very easily. Forgot to invert it. So there's S&P. That is interesting. Yeah, I could probably also color the S&P to where when it's sloping up, it's green, and when it's sloping down, it's, another color, like black or something. And then could also program it, and I'll do this another time, to where when we have a strange situation where the stock market is moving in a way that doesn't make sense with the VIX, have some sort of notification bar or some kind of indicator on the screen that shows that we have some kind of weird situation, and then we could look back in past and see when those occur, what is likely to occur next. Yeah, that sounds a pretty cool idea. I may try to do something like that. I'll have to. That'll take a little bit of head scratching to get all that done. Commercials do on a 6-month look back appear to be quite long on the VIX. They're quite long on the VIX. And just a few days ago, we had a situation where commercials were heavily long on the VIX on a 6-month look back, and heavily long on the as a percent of open interest, which I'm not showing as an indicator, but it's back behind here, I believe. Yeah. And when it's extremely long like this, you get the thin green boxes. So it looks like commercials are positioned for the VIX to move higher. The 13-period exponential moving average of the daily closes on the advanced decline ratio shows the extremely odd behavior as of recent, and really more weakness. Just not very strong recently. The really amazing thing was while this was moving down from August 21 through September 2, every single day the S&P made a new all-time high, and this is what this indicator was doing. Normally, in order to make an all-time high, it would be much higher readings than that. It just shows how very few stocks during that period were holding the market up. Moving on, sectors move quicker. XLE, large cap oil, it's generally moving lower into late October, early November timeframe. Matter of fact, I need to change that to November 5 back here. So generally moving lower into November, it won't do it as a straight line. We're getting a little bit of a bounce here up through around the changeover of month, and then on lower on large cap oil stocks. If if the roadmap is correct on Hurst, and it's been sticking with this idea for a long time, when we get down into the November timeframe, these large cap oil companies would be a buy. That would be a buy right there. And as you can see, the next move out of November will be up into February next year. Then a dip down into July, and then a long up move for, an up move that would last maybe a year. And this would indicate a couple possible scenarios. One certainly is inflation. And I can see the possibility of inflation on a number of my charts, including the US dollar index and the euro and all sorts of things. So inflation, but it's possible that it doesn't really get kickstarted into a strong move until about the middle of next year. But yeah, November looks like a buy on a lot of items. So as boring as this market has become and as odd as it has become, I really do think the best thing you could do as an investor and trader is to stick around because we're getting closer to that November window. XLE, that we just got a buy signal on Wednesday of last week. I think that'll probably end in profit toward the end of the month or early in next month. These large cap oil stocks are still quite low, and they do pay a dividend. And if they, even if they aren't paying very much of a dividend now, by the time they get up ahead of steam and past the middle of next year, I think they'll be paying a solid dividend as their stocks move substantially higher. Notice XLE, I'm calling for a bit more upward movement, and we almost have a bullish crossover. We're within an eyelash of a bullish crossover on XLE. This could be, an area where they would catch a little bit of rotation movement into it out of large cap tech or other items in order to grab the dividend. Baltic Dry Index, no real change here. Generally expecting it to drop down into November, back down to 725. That would be a 0.618 retrace of this move up back here. And then likely pretty bullish for some period of time after that. It could be that Baltic Dry Index finally will have worked through this long basing process that it's been under since 2012. Transportation, I think, is going to cool off here and move to the downside into November. Next, utilities, I suspect, will stay up through October, kind of as a flight to safety item, safe haven item. Well, the stock market maybe moves down into a similar time frame. KBE, banking, you notice I'm not expecting the world out of this move to the downside, as this item is really quite low in comparison with its all-time high, which is still standing back from March of 2018. So, and this, I got to tell you, this upward movement we're seeing in KBE since the March low, clearly corrective. And that means that at some point, we're probably going to see KBE plunge in another leg to the downside, but that may not occur until about February, March of next year. Until then, see, this is an area that could get a little bit of a bump through the end of the month, according to Hurst. But then, just like happens in all-in-one bear markets, looking for it to join into the move down into November, and then some buying opportunities down in there in November. Really, until right now, though, very boring, very sideways. Matter of fact, the last signal was to short it. I don't think it's a good idea, right? Not financials, something else. Not financial specifically, right at this exact moment. IBB Biotech had a real nice move to the upside last week, and Hurst predicted it. But now it's thinking that it'll top here within a few days and move down into November next. Home builders, the Hurst is actually expecting home builders to somehow stay up through October 25 and then move down. Right now, it's changed its tune a little bit, and it's down into January and relatively bearish after that. We'll see, but I'm really, on most of these items, it's been a fairly universal idea. We're going to move down from about now down into November timeframe. This one morphed just a little bit. Latest analysis on Canopy growth, more sideways business. You know, nothing really to write home to. Next major buying opportunity, probably in September of next year. VNQ real estate. This is more immediately bearish. This is more immediately bearish down through the rest of the year. And this is a current Hurst roadmap brand. You know, I completely redid this one yesterday. And it didn't change much, but it is up to date. And then I was talking about the potential bearish potential in retail XRT, which is really screamed to the upside and now is looking a little weak, and I think it's got some more downside. So is Hurst. It's bearish down into November 9. That also is an updated roadmap. I've also updated the roadmaps on the mining stocks, which is coming up next. No huge changes. Really looking to the downside here for the rest of this year still. There's been a large kind of interest in a potential triangle across here on GDX. But I still think based on a number of factors. So I'm using Hurst and I'm using the Ftse cycles program. Hurst is placing the 20-week cycle trough right here. Well, rather than repin it, I just going ahead and using the Hurst, and the Hurst is saying that it's expecting upward movement from August 25 through into the second half of October. However, that is based on placing the 20-week cycle trough here, which I believe is a nonsense location. Where should it go? I don't know. I've been talking about this for a long time. Oh yeah, William, it's DUST, D-U-S-T, is a way to short large cap gold miners, or you can use JDUST, JDST, to short the smaller cap gold miners. The opposite of those are Nugget and JNUG to the upside. Very popular ETFs. And they move, man. You don't have to put on big positions to see a pretty good size move. Although lately, obviously during this narrow consolidation, not happening as much, but there's going to be a breakout here. And so when I look at the FSC cycle program, why would I continue to look at the FSC cycle program instead of Hurst right now? And the reason is because of that that continued question on Hurst on where that 20-week cycle trough should reside. There's no good place for it, and that's pretty universal across the board. And so this is why I have been looking a lot more to this item. This method of analysis, the FSC one, which I think probably a lot of you have gained access to as well. So let's look at it. We've got 76 is the biggest green triangle I see. Also 189. Matter of fact, 189 is the strongest of the Bartels. It's the highest. It's made the highest peak. There's one at 99 and one at 76. Well, let's choose the 76. There's also one at 341, which we'll look at just for grins, but we may take it out. It doesn't change the trajectory that much. And there's one way down here, 15. So that is looking lower through October 6th, something like that. Let's take out that super long one. October 7, and there's kind of a double dip, October 19. October 19. So I had put October 20 on here. It's close enough. And then it's expecting a bounce only through November 12, and then down through early to mid-December. Oops. So that's where this date comes from, this date, and this date. Also on that, it is the highest trajectory was August 20, and you can see we're right here. So theoretically, we're in the middle of this downstream, and so at some point, this cycle to the downside is likely to grab hold of price and carry it strongly lower. That's the suggestion here, and so that's one of the reasons why, because of the difficulty that Hurst is having with the 20-week cycle trough and just about everything right now, the FSC is a valuable tool, and it's bearish next down through, mid to late October next. That much is clear, and so that's why I think this thing is going to break to the downside. Also, the US dollar has been putting in a base, and even though it hasn't really acted like it wants to break out to the upside, the only real reason it hasn't broken out, that the one that I can tell, is the influence of the Bank of Japan, our old nemesis, tries to rule the markets with an iron fist from time to time. If you look at some of the other items, like Canadian dollar and others, they already look like, the dollar. The dollar looks like it's on the cusp of a move to the upside against several of these currencies. The only one that's fighting pretty hard against that is Like I say, the Japanese yen, dollars continued to weaken even late last week strongly against the yen. So we'll see how much effect that has. Usually that has an effect more, the yen has more effect on the bond market, but so I really think the odds favor downside here. I think the odds favor the downside next through October 20, a little rebound through November 13, on down through December 19, or possibly a little later. And whereas on the Hurst side, it's thinking that this thing stays up all the way to late October before moving down into late January. But like I say, that is completely because it has not a clue on where this 20-week cycle trough really belongs. And the fact that it has placed it so close to us chronologically means there would be some more upward juice out of that 20-week cycle trough, out of that low, that would last a little longer. Well, what if it was here? Or what if it was here? Then the upward juice out of the 20-week cycle trough will have already, petered out to some degree, possibly. So that's why I'm trusting the Ftse program more. So I'm generally looking for a move to the downside. When you just look at the trend following template, we've had this nice trend channel moving up, and now we have GDX fell out of it once, came back barely above it, and now it's falling out of it again late in the week. It's on a sell signal here on Thursday, but that's weak because it's theoretically against the trend and it's in a gray box. At some point, this may decide that we've got a breakout condition to the downside. That may not happen till we get a close below the ATR volatility stop, which is currently at 39.81 on the GDX. Notice that we ended the week with a negative crossover on the MACD lines. Now, I've been working with MACD for a very, very long time, and I've seen it come down and kind of skim along here. And then at the point that it crosses here, this could follow through and be, pretty darn bearish across here, just slightly above or slightly below the zero line. When you get a negative cross, that could be something that has some punch behind it. So be careful. I would say that my preference is still to the downside. Is it possible that this is a triangle and it moves up the upside? Sure, anything's possible. And but I don't think it is probable. There was an attempt to buy GDX on September 10, but the downward movement on Friday on GDX was enough of a convincer to get a crossover of the Walter Bressert and its moving average. And so that attempt to get long on GDX, it's suggesting getting out of that trade in a loss, small loss, and going flat at this juncture. I didn't really update many of these other like GDXJ. Still, my preference is to the downside through late in the year. Same thing with silver stocks, downside through late in the year. I don't know if this wave count is correct. Just an idea. It's probably not, to be totally honest. It's just it was a way to warn of a bigger move to the downside. I do think that starting in the middle of next year, a lot of these metals may possibly move into, a strong move to the upside. So that I'm still sticking with that based on what I see in the US dollar index. Copper has been just crazily bullish. And bullish enough that I have to put in a potential extended fifth wave target that's slightly above price, I guess. It's been hard to understand why. copper of all things was the item that was just absolutely just won't give it up to the up, with this upside move. Even the Australian dollar looks like it's finally quit going up, and it's highly correlated to copper. But copper snuck up late last week, made another high. These charts really haven't changed much, although I'm going to show you something, and that is on Newmont. I did a new look at the Hurst on Newmont. It is bearish. It's calling this top that occurred back in August a 40-week cycle peak, and we're moving down into a 40-week cycle trough that is due anywhere from mid-October to mid-November. I suspect it will be mid-November. So I think this is going to break to the downside. There's no reason to call this a triangle right here. I don't think so. Last week I was thinking, well, if it was a triangle and it snuck up to one more slight new high, it is possible the wave B of a expanded flat could make a higher high than what it has so far. But based on Hurst calling this top a 40-week cycle peak, it doesn't seem like this would be the time for that to happen. So I've raised that, and I'm bearish. Newmont probably down into mid-November, and then the Newmont trajectory is bullish. From mid-November for the next 5 quarters or so. And so this is a high confidence roadmap at this time on the most influential stock in the GDX ETF. Do notice on the this is a weekly chart. This does look like a bit of a triangle across here, and sometimes a triangle will form an identical looking triangle in the RSI. But in this case, it has broken down now. Late last week, it has broken down and is no longer holding in what I would say a triangle pattern. It's broken too far down here. And that's kind of indicating to me that also that it looks like the direction is going to be down. Beware on dust and nugget. They just aren't generally good items to hold for more than just a few short weeks, really designed for maybe a few short days. And it's not a buy and hold situation because in those leverage ETFs, especially the highly volatile ones like that, there's a tendency to see slippage or due to time decay. So that time decay is definitely an element inside those leveraged ETFs. So be careful about holding them too long. If you hold them too long during a sideways period, you could give up all your profits, or your entire idea on where it was going to go could basically dissolve if you get a narrow sideways pattern for long enough. German Dax bearish, 1, 2, or an A, B, either one. Bearish here. You can see the MACD's have been holding up. I think that the break direction will be to the downside here. Diverging. All the way through this high in early September. And even though it's managed to stay up, I think that it is just about to break Sometimes I like to draw lines on the RSI indicator. And you can see it's sitting right on a shelf, potentially ready to blow to the downside. On the trend following system, we got a negative MACD crossover after a very long period of Z's, of snoozing. The MACD indicator has hardly gone anywhere during this sideways business. This very narrow consolidation pattern is very likely to break out, and I think the breakout direction will be to the downside, and I think that that breakout is relatively imminent. Just happen to see, my Elliott Wave eyes happen to see a potential pattern here of, if this is a wave 4, then this would be 1 of a diagonal, 2 of a diagonal, 3 of a diagonal, 4 of a diagonal, 5 in truncation here, or maybe usually you get up and throw over, but maybe it can't. That'd be very weak, a very weak sign if it truncated. If we got a daily close, I would, on your daily charts on the Dax, draw a trend line extending to the right from the low on July 31 through the low on September 4. Extend that trend line to the right. If you get a daily close below that line, then I think it's a potential breakout to the downside. Ftse remaining bearish through the end of the year. It's been trying to hold up, not doing a very good job, kind of chopping, but leaning over. This could break loose into a waterfall sort of decline, if you ask me. But based on what I see right there, and it could be imminent. It's been trying to stay up, but generally slanting a little bit to the downside. William says, be sure on the Dax, if you do see a break here, breakout. A daily close below the trend line on high volume means look out below. Now moving on to Asia, Canadian, Australian stock markets. Let's see here. You know, the China ETFs have just kind of been basing and moving sideways, and that's really kind of what I've been calling for is that, a basing pattern in the Elliott Wave being a 1, 2, and maybe an expanded flat for wave 2. When, I think we're going to finish basing toward November, and then pretty bullish. So also, I would put EEM on your radar as a potential bullish item starting in late November, early or maybe mid-November. EEM. And that would mean that the U.S. dollar would strengthen until about then, and then would return to weakening mode. Stronger dollar generally is a headwind for emerging markets. And so I think we're going to get a stronger dollar down through, and on the Hang Seng now, looking for downward movement all the way to December 7th. So that will likely be stronger dollar and then a weaker dollar here as it moves up into March of next year. So that same basic idea would be the case in EEM. EEM has benefited from the stronger dollar since March, and since the March low. I'm sorry, the weaker dollar. EEM has benefited from the weaker dollar since the March high in the dollar. And it's time for a correction, in my opinion, down through late in the year. And during this, we would get a stronger dollar, and then buying opportunity to join what I think is possibly a trend to the upside in some of these items. EEM is certainly one of them, but it's looking weak at the moment. It's looking weak. We're on a sell signal as of Thursday. We don't have a breakout yet. We kind of had one back here, but it didn't amount to anything. But when we get the next one, I think it could amount to more to the downside on EEM. That could be relatively imminent. And when you look at Hurst on EM, it is bearish from September 19. That's now down through December 7. Shanghai bearish through the late in the year. Next, Nikkei bearish through late in the year. Next, Canadian stock market bearish through late in the year. Next, I don't know if we'll get that big of a move. Doesn't seem likely. I think the oil czars are attempting to keep oil propped up. I think it's a highly manipulated market at this time, so beware. I don't think it's the greatest short out there. It's Canadian stock market. Not at all. Not right now. ASX probably going to move down when we see copper, gold, and silver move to the downside through late in the year. A Nifty 50 moving down through late in the year. Same thing on Brazil. It looks particularly weak right now. Brazil, as a matter of fact, on the signals that we send out to premium plan subscribers, the reason I even added the Brazilian 2 times ETFs was to give the potential of some actual volatility, where something would have the potential to really move and move big. There's the Brazilian stock market is one of the most volatile tradable items in the world, and so these should give excellent volatility movement in short order. And we got a buy signal on the 2 times bearish Brazil ETF on Friday. That one looks like a potential interesting one. Right there for a sizable move. I mean, this item These don't look like big moves down here. But from this low, for instance, to this high was a 35% move over a couple of weeks. And during that time, BZQ moved from $12.33 a share to $16.64. That's a very solid move percentage-wise. Very big move. So even though it doesn't look like much on this screen, some of these moves have strong potential. This is a back-tested item, and it's saying get long BZQ, or in other words, get short to the Brazilian stock market now. Okay, bonds, junk bonds. The Ftse cycle program is bearish junk bonds from now through mid-November. So I'm looking for that move to the downside. TLT bonds. This would be the complete opposite of everyone that I'm aware of in the Elliott Wave subscription business. Almost everyone is very bearish on this item. But based on cycle analysis, both Hurst and the Ftse program agree that this move we should see bonds moving to the upside. And that would be yields to the downside between now and late October, early November timeframe. That would obviously indicate that bonds might catch a flight to safety bid while the stock market corrects down into November. So in the trend following algo, this is really interesting. So we're on a positive crossover in the MACD lines. And we also have the ATR volatility stop, which has moved down below price candles and has been sitting below the price candles for the last 5-6 days. This, I think, could easily, with any kind of movement above these highs right here, could give us one of these orange dots, and that would be a trend following buy on bonds. That's what both Hurst cycles and the Ftse cycles programs are projecting for bonds. Next, it would be that they would act as a safe haven while stocks correct. So generally looking to the upside all the way to the end of October on bonds. This is the 30-year. Same situation has occurred on the ZB contract, the 30-year bonds. We have the ATR volatility stop having jumped down below price the last 3 days, even though it's in a sideways move. That's indicating that it's suggesting that a long position with the stop down here below price. The ATR volatility stop blue line indicator can give some very valuable information from time to time. We'll see if that one pans out. I will say this item has been very hesitant to break lower. Here's another really interesting thing that we've seen lately is the commercials kind of jumping on the long side of things, although they're getting a little back to neutral here. And so they're waffling a little bit, but for the most part, the commercials have been bullish on bonds until with just maybe Friday. They've been bullish on bonds, generally positioned bullishly. So as we move into the ZN contract, still looking to the upside based on two different cyclic methods up through late October, early November. Next. And then a move down. And I got to tell you, this move down, the composite line on bonds is getting more and more bullish. With this thing refusing to break lower, it's getting more and more bullish. And it's, by the time we get into October, this roadmap may change. And there won't be this projection of a big move down anymore down into January. That's what it looks like to me. Now, I haven't changed it yet, but that looks like what it's kind of morphing into. The more this thing kind of stays up, let's face it, the Fed, the one thing that would crack their whole plan would be for interest rates to start moving substantially higher, in my opinion. That would ruin their plan altogether. All of this debt that they've had to take on would all of a sudden have a much higher cost of carry. Not good. And so I think if they are going to jump in and force their hand on anything, it would be this. Or attempt to. Remember, these attempts on the part of the Fed to force something to do as they want it to do or need it to do. It just because they're trying to do that doesn't mean necessarily is going to work. Many times it does give the appearance of working, but it's not a given that it will, in fact, work. And the day that interest rates start, that this thing falls and we have a major chop and we have interest rates moving strongly to the upside, boy, that's a loss of confidence in the part of people wanting to loan their money, whether it's a bank or whether it's individuals, well-heeled individuals, whoever they are. There'd be a loss of confidence in loaning money. And if they're going to loan it, they're going to want more return in order to take on that risk. So it would be a major sign of trouble for a lot of things. So the bullish Treasury bonds did attempt a long position and closed the position out in profit, but it's currently flat. It isn't indicating a breakout yet. And the bearish bonds actually in a long position, but it's really just crawling sideways. There's no breakout yet. Very quickly, I've been showing this, including this in the daily trend following template screenshots, and that is a trend following a chart on TIPS, Treasury Inflation Protection Securities, showing that they have this expectation of inflation seems to be heavily agreed upon by most market participants. They believe that the actions of the Fed will create inflation, and that they're not, in other words, they're not deflationists. And lately, it's just been moving in such a narrow sideways pattern. This is unlikely to continue moving in this sideways pattern like this. There's likely to be a break, and I think the break will probably be to the downside. Here's my current Elliott Wave. I've looked a little more carefully into the Elliott Wave on Treasury inflation protection securities, and based on Hurst, this would be the deflationist view. I'm not absolutely certain of this at all, but I had to find a way to make sense of this plunge down here to below this low, and so the best way to make sense of it would be a very large degree supercycle wave 3 top in December of 2012, 3 waves down for wave A wave B that stopped going up at almost exactly 1.236 times the length of wave A. Now there is a higher target for B that could hit. And then a C for an expanded flat. So we'll see. This is something I'm still working on. But this thing that happened, this eruption that happened back in March, really made its mark on this item like no other. Like the plunge down into March was a deflationary plunge. At the time I was saying, okay, this wave B is done, it's a double top. But it was so quick, the plunge was so quick, and then the Fed was so quick to move in with trillions of printing that all of a sudden everyone was back on the inflation bandwagon with the moving higher. So we'll see. This is kind of a way to track, in my opinion, whether the Fed is going to win or deflation is going to win. And we're kind of at a critical juncture. Next up, we're going to peek at crude oil and gas. So crude oil, last week we were talking about how it had moved down. And all of a sudden, before it was able to put in what I believe was a clear 5-wave structure to the downside, a very clear 5-wave structure to the downside, it reversed and started heading higher. So it never did reach my target down here of 33 and some 68, I think it was. And it stopped going down, moved sideways, and reversed to the upside pretty solidly, and now it's back above 41 bucks. So is this the beginning of something, this move to the downside, or is it the end of something? Well, my main count, I've got 5 waves up complete at the high that occurred in late August. And then I've got this move down as a wave A. So I'm calling it the beginning of something on my main count. And then now we're going to get a wave B, and that wave B, could make a new high above the black. It actually depends on if this was a 5 or not. I'm going to leave that discussion of whether that's a 5-wave structure to the downside open, because this move to the upside is strong enough that if we get a WXY sideways move here, I want to leave open the possibility that wave B blue would make a new high above that high right there. And the best way to leave open the possibility that it could make a new high there would be not to call this a 5. So The very next thing that's expected, according to the Ftse cycle program, is downward movement. Downward movement through September 28, then upward movement through October 17, then downward movement through November 12. This is another one of those situations where, you know, does this 20-week cycle trough reside? It really should have happened quite a bit earlier than this. Hurst is now calling this the 20-week cycle trough, and that's why Hurst is calling for upward movement next all the way through November 4. That's what Hurst is projecting. So we'll find out the difference here pretty quick. But if this were going to be a fifth wave to the upside, for instance, this is 1 in blue, 2 in blue, 3 in blue, then A, B, C running flat for wave 4, and this would be a fifth wave up. Likely it would move all the way back up and retrace the entire thrust out of the triangle that occurred starting in early January. So it'd be all the way back to 65 bucks. It's hard to have a high confidence roadmap here in crude oil. As I have mentioned before, this sideways chop that lasted for weeks and weeks and weeks on end that finally gave way to the downside here. Looked awful fishy. Oh, and by the way, I have found a way to count this as a 5-wave down structure. 1, 2, 1, 2, 1, 2, 3, 4, 5 for 3, 4, 3, triangle for 4, 5. So I guess I am counting it as 5-wave structure in my main count. I hate to do that. That pigeonholes me into thinking that 43.78 high will hold, but I guess I'll do it. So in a 120-minute chart, the next thing is expected based on Ftse cycles, which I'm trusting more. I've already talked about the reason why. Would be downward movement through the rest of the month. Downward movement through the rest of the month. And this looks a lot like an ABC pattern to the upside. 1, 2, 3, 4, 5. So there's crude oil. I think it'll work lower for the rest of the month based on the Ftse cycle program. Now it's on a buy signal on the daily contract on the trend following. And here's an amazing thing. These brown boxes only show up when the trend is overextended, and that is when the ADX line is above 60. So obviously the trend was mightily extended as it moved down into that April low, and it was that particular brown box showed up during the wave 3 of this thrust out of a triangle. Didn't show up at the end of wave 5, so there was a bullish divergence that you can actually see pretty cleanly on the MACD at that low in April. And it only took just this very slight bit of downward movement that we saw. Honestly, it wasn't very big in crude oil. It certainly wasn't big in comparison with what happened back in April, in order to create one of those brown boxes. So the ADX very quickly got above 60 here. And that turned out to be a really strong signal that all of you would have seen in your email Monday and Tuesday night. And that would have suggested that we're going to, it's deeply oversold. We're likely to get a bounce. And now we've seeing a green triangle. We've got it moving. It's moved back to the ATR volatility stop line, and now we have a MACD line crossover. So it's a little iffy to call for this downward movement based on the Ftse cycles, strictly based on the Ftse cycle, based on how strong the move up has been so far. What if it's a 1 and a 2 and a 3 and we just get a 4 and it keeps going up? And that would be the alternate count, that it would generally continue the upside all the way through November 4. So it's kind of at a critical juncture here. I don't have a tremendous amount of confidence in the main or the alternate. But right now it's on buy signals. Also, sentiment. We have commercials on a 6-month look back all of a sudden heavily long. We also had the commercials as a percent of open interest heavily long going into that. So we kind of have that we really have the commercials positioned fairly bullishly here. It's the first time we've seen that since back here in mid-October of 2019. As you can see, that was there was a bullish move up out of that condition. So we're getting it again here. Yeah, could move higher. Natural gas. Okay, here's the thing though. This candle here on natural gas right here is bogus. This is almost certainly due to a expiration, and so I think we had, no, I don't know what that is. Yeah, we had an expiration. We're on a new contract. Genesis, my feed, where I get my data feed, we're just 1 day into the new contract, and this is an 057 contract, which means that they are going to back adjust, and no, they're not going to back adjust. Anyway, I looked on my Thinkorswim platform, and there's no such thing as this candle jumping way up here like this. So this is not right, and that should get fixed. I think that's all. And what happened on the Thinkorswim platform is we got just a little bit of an upper move like that. So this candle really belongs right snug up down here next to that. That's going to fix itself, but don't expect. Yeah, I'll probably go ahead and get you this screenshot, but that candle right there is not right. So I really haven't changed my Hurst roadmap or my Ftse roadmap, and that is that generally moving lower. Admittedly, this looks like a 1, 2, 3, 4, 5 already. So, and this looks like a 5th wave. So we could get a pullback. We could get a pullback, but probably only to the wave 4 of 1 lesser degree. And then I think it's on down. And what we would end up with, it was an ABC for a W in green, then an X wave in green. So like a double zigzag. Now this candle blow it off. It doesn't belong there. It does not belong there. This is not right. Genesis will fix that next week. So I can see this thing pulling back, maybe back here to 240 next before continuing lower. And so, you know, until Genesis fixes this, which it should fix probably by the close on Monday, I'm not going to include this trend following chart because I think the trend is still down, and that is just an incorrect candle placed incorrectly by the feed at expiration. So the general idea, and you can see on FCG natural gas stocks, yeah, we got to see a little pullback, but generally the general trajectory is still to the downside. So this could be a 1-2 and a 1-2. We still get a 3-4-5, and it could go deeper than what I've shown by the time we get to mid-November. 1-2, 1-2, then on down. Well, could nat gas be starting a 5-wave structure to the upside? I don't think so. This move to the downside right here really didn't look like correct for a major bottom. Now, Hurst does call that a 40-week cycle trough. That's problem number one. So I'm not sure that expecting a 5-wave structure up from this low is the right thing to do. Number one. Number two, this looked like a 3-wave up structure to start, not a 5. Now this looks like a nice 5 here. And so could it be a 1, 2, 3, 4, 5? I don't think so. I doubt it. You know, this is based on looking at the agreement of the 2 cycles programs and the forward roadmap. You'll never catch me saying that something is impossible. So if your question is it possible? My answer is always going to be yes, because anything is possible in these markets. Anything. So never count anything out. But I don't see why that would happen here. We'll see. It'll be interesting to see if seasonality can take over here. Williams says Larry Williams says seasonality is generally bullish from about now on through the end of the year. So we'll see. I want to see this candle corrected, and then I want to see the price action. But here's another thing to consider. Here's a 1, 2, 3, 4, 5. That to me is a really clear 5 down. So that, from an Elliott Wave perspective, would be the beginning of something. And a return back up to this level here would give us essentially somewhat of a bearish head and shoulders. There's the invalidation right there. So 2.905, that's where I'm wrong, and I've got to change the count. Yeah, and then the other thing you get that begs the question here is that this move down here, this up, this down, or this to the downside, this to the upside, and this to the downside. So that's obviously, if you were going to call a bottom here, a major low, then in my opinion, you would have to call this a 1, 2, 3, 4, and an ending diagonal for 5 to just ever so slight tick lower than this low. That is just a weird looking 5-wave structure, really strange. It doesn't look right, and then it didn't act right as far as the 5th wave. 5th wave in commodities typically the most aggressive, and this would be a very choppy overlapping diagonal for a 5th wave. So there's a number of reasons why I've been really hesitant to call this a major low, but I've seen a lot of people wanting to call it that. Primarily, I would say because of the expectation of bullish seasonality. So we'll see how this pans out. But could this be a 1, 2, 3, 4? Yeah, I guess so. That would be an awfully aggressive wave 4, and wave 4s really shouldn't happen in 5 waves like that. So there's a problem. Is natural gas the easiest thing for me to analyze from an Elliott wave or otherwise standpoint? No, it's probably the hardest. Okay, and I already showed you on FCG, really looking for a major low down in November. Why? For the same reason that looking for a low in everything that bottomed in March, because that's where the next 40-week cycle trough is due. Maybe the weather stays really nice all the way and hot all the way to November. That would kind of foil the seasonality a little bit, and I certainly wouldn't put the current climate, wouldn't put it past the current climate to do exactly that. The trend following algo on FCG natural gas stocks did just get a buy signal, but it's currently against the trend and it's still below the ATR. So a very, very weak beginning of a potential trend change, maybe. Okay, I want to look at that uranium stock real quick. I did a new Hurst on this, and it is projecting on that uranium stock. See how we've been moving sideways, and it closed toward the lower part of that candle right there. So I'm looking lower from about now down into December 2. I'm hoping that this stock gets down in the low 8s, and then I think it might be worth a shot, buying some shares on this and just sitting on them. Because this is such a massive pattern that I believed ended in a textbook way with this throwover back in March. So after December, there should be a wave 3 to the upside, and the composite line starting December 2 is bullish up through March, pull back only through April, and then it keeps going up all the way through April of 2022. So this, we're getting closer. And then I've been showing this DBC trend app, and it was looking very bearish there for a minute, and now we have this pullback, probably because of oil, and the trend just changed on Friday to the upside on DBC, almost certainly because of oil, the rebound on oil, and we got a bullish crossover down here. So we'll see how this pans out. You know, it seems more likely that this would peter out and we would get that move down into November on this, but we'll see. Now moving to metals. A quick, since I landed on Palladium when I got here, quick look at Palladium. The cycles tools, the two different cycle tools are in agreement. They were expecting a top in Palladium about now and a move down into mid to late November next. The Hurst cycle analysis is still calling this high back here an 18-year cycle peak. And Palladium was one of the most aggressive, strong movers to the upside till it topped back in February, had the plunge down into March, and I would have to call this move to the upside corrective. Doesn't look impulsive to me. Maybe an A, B, and then 1, 2, 3, 4, 5, kind of an ending diagonal. A, B, C. It's probably moved up enough. This is looking bearish to me, Palladium. Copper, last week found another new slight high. I do want to point out this continued situation on the positioning of the commercials against the positioning of the large specs. The large specs are heavily long on copper now. They're the trend followers. Commercials are the hedgers, the producers, and they appear to be heavily short. And so that is usually a sign that we are at or near a top that would take a while to work off. The last time we saw stuff like that, you know, we got a little bit of that here, and this move down here. Got a little bit of that here, and that was the big beginning of a really big move to the outside, where the black line was pretty high and the red line was pretty low, and then we got it again. We got it back here as well, which is very close to a 9-year cycle peak. So I know I keep pointing this out, and yet copper continues to move higher. So it is the single, it's the winner in the stubborn parade as far as wanting to hold on to this trend going to the upside. You can see that the Hurst and the Ftse cycles programs are a little bit different on where they think the top is going to be. So I think we're moving into the top inside of this window, and we still really haven't pushed substantially past my best target for wave B of an expanded flat. We have that bearish spread. We have a huge divergence on copper. This move to the upside looks awfully choppy to be a fifth wave. It would be almost impossible to count that as a fifth wave. So I'm calling that as a corrective B wave. Finished. And that it's going to move to the downside, generally work its way lower down into late in the year next. The trend, even though it's been moving to the upside, isn't strong. Look at the ADX line. It's black. It's below the 25 line. It's continuing to go lower. This is not a strong trend. It doesn't appear to me to be likely to break into a strong trend either, despite the little cross, what I think is going to be a fake out crossover on the MACD lines. Notice that copper moved up nicely in a channel, broke out of the channel, continued to travel up the underside of the channel, looked like it was breaking away, made one more new high. It just didn't seem to want to give it up. But yeah, the lower FSC date was the next one. So the FSC cycle has been bearish from a peak, an apex, if you will, September 2, and a move down through September 14 next. Wait a minute. That isn't right. That should say October 14. October 14. And just to make sure of that, I'm going to bring this over and make sure, because I know I have some subscribers that are short copper and they're feeling the pain. It's being sluggish. It hasn't given up yet, though. I think it'll get it. Oh, there we go. And so we have green triangles at 106 and 47. And 50, 30, let's see, 28, that 38, it's pretty big, 38, 28, 38, and 50. There's probably too many of those stacked up down on that low end. So I'm going to pick 28 and 50. No, 47 and 106. That's about a 2-to-1 ratio. And then something around 26. So I would say we're looking lower through late October. And it should have topped around August 18th, and it just didn't. So I'm not sure what cycles I put together in order to produce this down move right here. Obviously slightly different than I just worked out, but I did work out a way for it to move generally lower into November in agreement with everything else. And I think that it's important that it be at least be somewhat agreeable with virtually every other item that I have run cycle analysis on. So I think I still think it's going to reverse and move lower. You can see that commercials as a percent of open interest, heavily short. Commercials in comparison with their highest and lowest levels of bullishness over the last 6 months, heavily short. Retail sentiment pretty darn high, still at an 80. That is a bearish spread. It just won't give up. It's been kind of really odd. And I've been pointing out how odd it was, because the move up, like right through here, didn't look like a wave 3. This doesn't look like a 5th wave. Really nasty business, really nasty price action in this item. Platinum, I think, is ready to move to the downside. It ended the week in a very bearish looking posture. And the Hurst and the, now this item really should be fairly highly correlated with copper. They're both, you know, industrial metals. And the roadmap is a lot clearer here, moving down into this window, up into this window, down into this one. So I'm bearish on platinum and looking lower into the first half of October. If we use the Ftse cycle program, it would be down through October 9, up through November 5, down through the end of the year, and then a bit nice, big, bright, new bull market and when wave 3 type of move. Does Ftse have a, I may have already ditched that Ftse. Where'd it go? Down through late October, this was copper. Up through early December, yeah, and then back down. But remember, on cycles, they are, what is it? What is the word? There's a specific word in the cycles world that is very important. No, they are detrended. They are detrended. So we can't take at face value the high or the low that they create during these swings. That is, it is simply attempting to tell you when, during what chronological periods it would be bearish and during what chronological periods it would be bullish, and it doesn't even pretend to tell you how far it's going to go. Matter of fact, sometimes during something that looks very bearish like this, all you get out of it is sideways. A sideways is a correction. And even in Elliott Wave, sideways price action is corrective. And there are plenty of times where we see sideways price action. There might be a B wave or a triangle or an X wave, any number of possible scenarios. A flat, obviously, flat would be sideways. So these are detrended, and I don't think you can take them on face value on how far those swings are going to go. So platinum bearish. Daily trend on platinum. Okay, here's a situation right here where the ADX line is black. It's slightly below the 20 line, but the red line, the bearish line, the DMI minus line is above the green line or the DMI plus line. So it is a bearish, it's on a bearish crossover. So if this started trending to the downside, and that is my call, that we would be getting into a wave 3 here. And the point of recognition of a wave 3 down, then I would say any kind of daily close below the ATR volatility stop blue line would be bearish, despite the fact that we just had a trend change to the upside, because really all this is a trend line break and then a move back to the underside of the broken trend channel. This could easily turn into a wave 3 to the downside despite the current trend direction as shown by the MACD, and it could easily turn and cross over this line again. We get another one of these pink lines within just a couple of days and a breakout move, in my opinion, on platinum to the downside. I think that's what's going to happen. I think it's already started. Precious metals. Gold. It is based on all of the evidence that I look at. I have not changed my mind from last week. I think that the direction of the breakout on gold is going to be to the downside after this sideways flag or pennant formation. I think it's probably is a triangle, but I don't think it's a bullish triangle. I think it's a bearish triangle. It's where we got a wave A to the downside and then the triangle. A, B, C, D, E, and a move down into early October, probably, a rebound into late October, and then on down through pretty close to the end of the year. There's going to be a couple of ways to count that. One is if it starts with a triangle or an A, B, C, that's a triangle, that would be a corrective structure, and that would complete a wave W. Then we get an X wave to the upside, then it would finish the correction. If this happens this way, please remember this. Please store it in your memory banks as something that I was talking about ahead of time. How many people would already be calling for a potential double zigzag that will last toward the end of the year? You have to marry Elliott Wave and Hurst in order to do that, or some kind of cycle analysis. Because if that's the way it turns out, I hope I remember. I hope I remember to look back and put out some bragging, YouTube about how I called it real early. But this continues to look like the way it's going to go, and I would say things look bearish. Admittedly, the downward price action is only, according to the Ftse cycle program, supposed to last through September 24. Is that enough time for a thruster out of a triangle? Yeah. I mean, it's just a few days, and it could last a little longer. That would happen this week. I agree. Trading within a B wave is dangerous, William, because B waves can be any corrective structure. Now, trading, after you see something that looks a lot like a triangle isn't necessarily dangerous unless you're wrong about the breakout direction. And if that is the case, then what you have to do is you have to look at, and I showed you these last week, look at the invalidation points of the triangle. So if this is A of a triangle, no, if this is wave A, and then we get to triangle A of the triangle, B of the triangle, C of the triangle, D out of the triangle, and then this would be the end of the triangle. And then what you would expect from that high would be a 5-wave down structure followed by a partial retrace and then more continued strong down. So, I mean, we're right in the pocket on this bearish call because that does look like a 5-wave down structure there on this 180-minute chart. And I don't know what this looks like to the upside. It looks like a partial retrace, and then it's closed kind of weak. So we'll see. Another trend line break you could look for here possibly would be this one. Look for a break below that. After all, this is the last 5-wave structure we've seen. Remember last week I was telling you this looks like a 5-wave up structure? And then I think we got a triangle and then an ending diagonal or something, is whatever it was. It didn't follow through strongly with a wave 3. So if this is going to be a 1 and 2 down through here, then it didn't follow through strongly with the wave 3, and it's still in position to break either way on the triangle. But now this week, the most recent 5-wave structure we've seen is this move to the downside. So thrusts out of triangles are real quick and they're fast, they're aggressive, and you definitely don't want to be on the wrong side of one. So if you were aggressive about looking for a short here, then I think you would short any kind of daily close below the ATR volatility stop on a 180-minute chart. And that would, in order to do that, we'd probably be breaking this pink channel. That would be the earliest you'd want to count on something like that. If it moves above this line before it moves below this line, then we very well could be breaking to the upside out of the triangle. The trend following chart, in my opinion, favors the bearish case. So gold traveled nicely in this trend channel. It got extremely overdone to the upside in early August, and admittedly it's moved sideways ever since then, but now it's flirting with this lower trend line. It tried to move below it here, couldn't do it. Then it tried to do it here, did close right below it, and then kind of finish right at that trend line. So it's really at a potential imminent break point to, in my opinion, to the downside. There's the ATR on a daily chart, ATR volatility stop, and it's at 1911.3, and you kind of daily close below that, and I think it's going to move lower. And then we probably see the dollar moving higher. And see how the MACD line has come down and kind of fallen asleep right here. I've seen this many times. I've seen it break from here to the upside, and I've seen it break to the downside. But if it breaks to the downside, it's probably going to be pretty aggressive. The momentum algo was last attempted to go long on gold on September 9. And it closed that trade out because of a loss of momentum on Thursday of last week, and a very small loss. And now it is flat. Any kind of daily close below this ATR line, which currently is at 1931.2, it would be a very bearish sign. So that is, and then quickly the sentiment on gold. If you look, the 6-month look back position in commercials is moving to the short side. This is very telling on the quicker acting percent of open interest has been moving up, but it's not extreme. This could break either way, but my favored direction at this time continues to be to the downside. Silver. Notice on my silver chart, this alternate, that this move, so the move down from the 2011 high down through the late 2015 low was a cycle degree wave A. And then we got an A in burgundy, a B in burgundy, and C in burgundy, that would be the end of cycle degree wave B on the main count, but the alternate is that wasn't the end of wave A. The end of wave A down from the 2011 high actually occurred in March of this year, and that was the end of a triple zigzag for a cycle degree wave A, and that the wave B is going to take it to the upside. It's going to take a lot longer than what we've seen so far. This would fit with longer term Hurst on the US dollar index, that this initial 5-wave up structure is just a wave A, and now it is time for a B wave down into early December, according to Hurst. That would be a major buying opportunity in silver. And then we get a 1 and a 2 next year through mid-year, and then it's off to the races in wave 3 to the upside. That is a new alternate that allows for a strong buy signal late in this year. Kind of like that. That may end up turning into my main count on silver. So silver's been chopping sideways as well, but it really doesn't look a whole lot like a triangle unless you do this. A, B, C for the first leg of the triangle, B, C, D, E. And it would be probably right in position for the move to the downside. That's the only way I'm to label this in silver as a triangle, in my opinion, is that of a bearish triangle. I don't currently, let's see, A, B, C, D, E. Yeah, I guess there is a way to label it as a bullish triangle as well. So this is going to be interesting, man. This is going to be really interesting. If this is a triangle, which way the break goes. And when I look at Hurst, or the Ftse cycle program, let's say, well, Hurst is also bearish. Why? Why is Hurst bearish? Because it's calling this a 40-week cycle peak right here. 40-week cycle peak. And the general idea would be for a move to the downside to the next 40-week cycle trough, and that's due in early December. This move to the downside here was certainly impulsive. Got that as a wave 1. This looks like a nice wave 2, and I really think that what we're getting here is some stacked up 1-2s. You know, a lot of people don't realize, but triangles actually are fairly rare. Triangles actually are fairly rare. There's a lot of times where you can swear you think you've seen one, but in hindsight, that couldn't have been what it was, because maybe it was in a wave 2 position or something. Depends on the US dollar, of course. But this could be very bearish, a little phase for silver. Moving down into a major buying opportunity late in the year. So there's silver. Trend chart, big loss of momentum. The MACD lines are still wide open apart. That has a bearish look. And we're in this sideways consolidation, and the last signal we got was actually a sell on Thursday. Need to know the direction, need to know which way it's going to break out of that gray box. The momentum algo gave a sell signal on Friday on silver. This could be the beginning of the move. If it is, then we're likely going to see that move up in the dollar. Look at the sentiment on silver. Commercials as a percent of open interest, heavily short. Commercials in comparison, positioning in comparison with their most bullish and bearish positioning over the last 6 months, short. Not heavily short yet, but heading that way fast. These two indicators to me indicate the direction of the breakout will be to the downside. I know I've said that a million times. Okay. Moving on to currencies. Finish up. So if we're going to get that break in the metals, and I'm pretty immediately bearish on gold, silver, and platinum, and copper, then we would likely, let's see finally the U.S. dollar kind of start moving a little bit more aggressive fashion to the upside. That is what Hurst is and the Ftse program are both calling for, is a move up into late October next. This could easily be a 1 and a 2 and be off and running to the upside. There was a nice divergence into this low, actually double divergence. So I know this wasn't a very clean 5-wave up structure on a short-term chart. I don't care. Based on the cycles, this was very likely a 20-week cycle trough bottom. Matter of fact, it's labeling it that, and that it's the direction of the break is going to be to the upside. The last signal we got was a buy signal on Thursday on the trend following algo. It's still above the ATR. That's bullish. We don't have a bullish crossover of the MACD of the 0 line yet, so we don't have one of these green stripes yet, but I think that's coming soon. The current spread between the commercials and large specs on the U.S. dollar is clearly bullish. The last time we've seen a spread like that was back here like this in May of 2011. Another one here, followed by upside. Another one here, followed by big upside. Another one here, followed by big upside. So we really have this condition in place for a bounce, potentially a sizable one. The algo, the actual last signal we got was a sell. That was on Thursday, 9/17, but it doesn't mean much given the rest of the evidence. And it's currently at break even. Sentiment on commercials are heavily long via the 6-month look back, and they are also back to heavily long the dollar as a percent of open interest. So the sentiment conditions are bullish the dollar. So what's been holding the dollar down? And I would have to say the answer is probably this pair right here, the USD JPY pair. Look at this smackdown that's going on to the downside. It's corrective, but it keeps going down. Definitely a sign of central bank activity, in my opinion. Such a nasty item. From a clean structure standpoint, it's hard to have clean structures when central bank is constantly screwing with the deal. I'm sticking with this call for now, even though it's absolutely within an eyelash of invalidating. Sticking with the idea that we're going to get a move to the upside in the US dollar, even against the safe haven yen. But it's got to get going now. You know, any more new lows, and I don't even have a count for it. I don't know. It'd be hard to apply a count to this thing. So the ADX is way up here at 48 now on USD JPY pair on daily chart. That's pretty lofty. And usually it starts running into a little bit of an attitude toward wanting to change trend there. You know, we do have a little long wick on Friday, but it's very early to say. So my prediction is that this pair is going to turn and move to the upside. We'll see if that occurs. There's no necessarily super strong evidence of that being imminent there. With the algo, the momentum algo is on a buy since September 8, and it's in a nice profitable trade. But the Walter Bresser does look a little toppy. And that reminds me, I need to get rid of those rolls. Sentiment neutral, hard to read on the yen. Canadian dollar. Canadian dollar is acting a little jumpy off of this low, you know, and when this pair moves to the upside, we get a stronger dollar against the Canadian dollar, and that theoretically would create a environment that would be weak for oil. As you remember, on oil, based on cycles, I was looking for downward movement on oil through the end of the month, and that would mean upward movement in this pair toward around the end of the month. And so those are in agreement. Looking to the upside on USD CAD, and look at this. That look has kind of a bullish look to it as far as the way it ended the week. This could even be a 1-2-1-2. Also looking bullish is the USD CAD on the trend following chart. It has broken up out of the channel. It's above the ATR. That is theoretically a bullish trend line break, and we'll see if we get the follow through to the upside. I think that's what's going to happen. Canadian dollar, so this moves opposite the USD CAD pair. So I'm thinking I'm looking for a weak Canadian dollar. The last time the AMA algo tried to do anything, it was a buy on Thursday, but it's already out of the trade on Friday, suggesting getting out of the trade because of a loss of momentum. So this is, in my opinion, a very early sign of bearishness for the Canadian dollar and for oil. And that should continue through the end of the month. The euro, Australian dollar, and pound. Start with Australian dollar, which is highly correlated with copper. You can see the Australian dollar peaked way back on September 1. And it looks to me like it's putting in a 1-2 or an AB, and it's ready to break to the downside now, the way it closed the week. So, and I am bearish, and so is cycles analysis, down into mid-October next, a rebound into early November, and then on down through early December, major low, major buying opportunity there in early December on the Australian dollar, and might be able to hold that for quite some long period of months. But right now, looking for the, that all of that very elusive wave 2. Been expecting after a wave 1 to the upside. So here's the wave 1 to the upside. Looking for a wave 2. And the MACD does have a little bit of a bearish tilt to it here to end of the week, but it's still waffling in a little gray box. We'll see if it breaks. It's just barely hanging above the ATR volatility stop on a daily chart. I think it's going to break to the downside. The last attempt on the AMA algo, the momentum algo, to do anything was a buy on September 11, and it is still in that trade. It is still in that trade. If all of a sudden the Australian dollar moves down below 72.15, that'll stop out that long trade, and that stops being hit might propel this currency lower. We definitely have a bearish condition on the sentiment. Commercials as a percent of open interest, heavily short. 6-month look back, heavily short, and as short as they've been at any point in the last 6 months. And they've really, commercials are committed to a short position here. Retail sentiment still pretty high, 75. Lots of room to the downside. So I think this is really close to letting go. This line right here is copper. And you can see that it has not broken to the downside yet. As a matter of fact, it just got through on late last week, making a new high for the year. Not the Australian dollar. That's still holding that from September 1. Euro USD looking to the downside to late in the year. Next, after a 5-wave structure to the upside. It certainly has been slow to give way up here. It's been real choppy. Kind of putting in a little kind of head and shoulders looking thing possibly up here. I think that the direction of the break will be down out of that sideways area. After a 5-wave up structure, we'd normally look for a move back to the wave 4 of one lesser degree, and that's really close to a 0.618 pull retrace. So generally looking lower through late in the year, down to 1.115 area. 1.115 area, major buy opportunity at that point, in my opinion. Lots of upside from there. Just need a wave 2. Looking for an ABC zigzag for wave 2. Still stuck in this sideways mode, looking for a breakout as far as trend following goes. Would likely need to get a daily close below the ATR volatility stop indicator, that blue line. That is at 1.174, basically 1.175 right now. Totally trendless right at the moment. Although the MACD is making its way lower, those lines haven't given a positive cross down here and don't look like that's necessarily imminent. I think the break will be to the downside. Euro on the AMA algo, the momentum algo. Last signal was a buy on September 9. The system exited that trade in profit on September 15. As you can see these algos, many of them are continuing to rake in some profitable trades. That's those green boxes. The thick red boxes would be the losing trades. And so this algo's been doing great. I mean, I could find this losing trade here, but one little bitty one here, but very few others. If they're there, if they're tiny in comparison with the nice big winners, the green boxes, or the green blocks. If anything, the positioning on euro is still bearish, although it's not quite as bearish on a 6-month look back as it was a couple of weeks ago. It's still on the bearish side, and the retail is still quite long at 72. Still, I think, have some froth here that needs to work its way off. British pound, I think it's giving a very bullish 1-2-1-2, but this next wave 2, I think, is going to last all the way to the end of next year. So generally, looking for a pullback on the British pound off from this 40-week cycle peak down into this 40-week cycle trough due in February next. And I think that it, based on what I see so far and where the next peaks and troughs are in the Hurst roadmap, that we're going to get a diagonal, a 5-wave leading contracting diagonal down into February next year, next on the British pound. So I think we might get a little bit of a bump here to finish an A, B, C for a corrective structure for wave B before it moves lower. There's the trend channel. The price has been flirting with the bottom of the trend channel now for about a week, a little longer than a week. On the pound dollar, the trend has turned to the downside on the pound dollar, and I think the general trajectory will be to the downside. Prices below the blue line. All in all, a fairly bearish mix, but beware of a little bump to finish this corrective structure before it continues to the downside. And we'll finish up with Ftse, Swiss franc, and also take just a quick look at Bitcoin. You know, on the Swiss franc, here's the trend following algo, and notice that we ended the week with a nice green bar. And despite the fact that that gave a weak sell signal inside a green box, this could be the beginning of a bigger move to the upside, in my opinion. Let's, if we look at the longer term roadmaps, yeah, I'm looking up, pretty much up from now through the end of the year on Swiss franc. I like the way that closed on this item on Friday, with a nice green candle closing near the top, and that could be the beginning of this move. Been looking for quite a while to the upside. And, you know, it could be this 2-month-long consolidation down here. Finally about to finish and break out on wave 3. Certainly given plenty of warning. And then one last peek at Bitcoin as far as the Elliott Wave and Hurst roadmap on Bitcoin. Over the weekend, it's moved up just enough to overlap this low back here by a little bit. So I'm going to turn on the streaming. And so far, we just have a 3-wave move to the downside, 3-wave move to the downside. And then we have a little bit of an overlap up here. So I'm looking for a top here within a few days on this move to the upside, and a move down into early November next, just like almost everything else, that should be a major buy. You know, we're really only about, what, 6 weeks, 6 to 8 weeks away from major buy zone on just a whole bunch of stuff. And so probably need to be planning ahead now about what your favorite things to own moving forward would be based on the way you feel about a number of things. That is everything I count. Thank you so much for joining me. And thank you for your subscription. I think we're moving into ever so closer to major opportunity in these markets. Probably going to have to wait until after this election is decided. And in the meantime, we got time to plan. And that's what I intend to do. I've got a lot of dry powder myself personally, and I want to be ready for major buying opportunity coming up pretty soon in a number of items. Have a great week. Enjoy a little football, maybe a little baseball. There's only about 9 games left in the baseball season until the postseason. It's been an odd year. I was glad to see football come back a little bit. Kind of makes me feel like maybe there's a little bit of normalcy in the world, a little bit. And I hope that everyone's staying well, staying safe. Have a great week in the markets, and we'll talk soon. Bye-bye.